Time for some business news. Charles Pellegrin is joining us here on set. He started today with the ever-growing concern over China's property sector, Charles.
That's right, Stuart. Since the government issued new rules in 2020 to control the amount of money big real estate firms could borrow, the property sector has been in crisis. Evergrande is the company that garnered the most attention when it missed debt payments that year, and it continues to turn at a loss today. Real estate, depending on the calculations, represents anywhere between 15 and 30% of the Chinese economy. And the company that's getting headlines this Thursday is Country Garden. It's one of the biggest property companies in the country and has warned that if its performance continues to deteriorate, it could default on its debt. Well, in the first half of the year, it accumulated total losses of 51.8 billion yuan, or 6.51 billion euros, a record for the firm, and has total liabilities of 1.36 trillion yuan. It's already missed interest payments on bonds that are due this month and is reportedly in talks to extend the deadline for the repayment of another bond. Well, to raise cash, the company says it will issue over 350 million shares next Wednesday in order to pay a chemicals and manufacturing firm it owes millions to.
Yeah, they're astounding figures, aren't they? I mean, it underlines, doesn't it, Charles, the current struggles, really, of the Chinese economy as a whole.
The economic growth there is weaker than it used to be, with an objective of 5% growth this year that some believe is going to be hard to keep. But that's not necessarily the worrying part. Just like the real estate sector, local governments in China also have a huge debt problem that's weighing on the wider economy. Youth unemployment hit record levels of over 21%. And by some measures, consumer spending has been weak. A whole slew of bad economic indicators have been a cause for concern, and the latest being the country's official Manufacturing Purchasing Managers Index, which tracks manufacturing activity. Anything below that 50 mark you see there means contraction, and in August that indicator was at 49.7. This means that Chinese manufacturing has been contracting for the fifth consecutive month, even if, as you can see, the trajectory on that line there is improving slightly from month to month.
Perhaps not surprising, though, that negative data on the stock market, it's playing a negative role, isn't it?
That's right. Let's look at how the Asian markets are doing this Thursday. Shares on the Hang Seng in Hong Kong, as well as on the Shanghai Composite, slid this session. The Shanghai Composite down 0.5%. Same goes for the Hang Seng in Hong Kong. The Nikkei in Tokyo, though, closed the session in positive territory after some better than expected figures for retail sales in July there in Japan. And shares in Europe at the open are mixed. This after Swiss banking giant UBS posted better than expected profits of $28 billion in the second quarter. This comes after the bank was forced into taking over its embattled rival Credit Suisse earlier in this year.
Finally from Charles, it is not all bad news from China. China has cemented, in fact, its place as the world's top car exporter.
China overtook Japan as the world's top exporter in the first half of this year, in part because of increased sales to Russia. Imported Chinese cars now account for nearly half of Russia's market, after Western and Japanese automakers halted production or pulled out of Russia entirely due to the war in Ukraine. James Mulholland has the details.
Chinese manufacturing muscle on display. This recent auto show in Moscow was dominated by the Zeekr electric vehicle, and it has many Russians convinced.
Chinese cars have got very good. They haven't given in to the Europeans. It feels pleasant to be inside, just like in a premium class car.
I'm a bit surprised by what I have seen. I think very soon Chinese cars will surpass European ones, both in electric and combustion.
Russia has become the top importer of Chinese vehicles, spending over $6 billion between January and April this year. They now make up 49% of the Russian market, compared to just 7% prior to the war in Ukraine. Chinese automakers exported 2.3 million vehicles overseas from January to June of this year, up almost 77% on last year, according to Chinese authorities. The country overtook Japan as the #1 exporter in the first quarter of this year as it capitalized on the corporate exodus from Russia following its invasion of Ukraine. The surging exports have also been attributed to the growing popularity of Chinese electric vehicles.
The manufacturer has spared no effort to cater for both Chinese and international markets. It's a family car with all the creature comforts of a German car and all the reliability of a Japanese car.
Chinese firms have also boosted sales in Russia by taking over assembly lines at factories vacated by the likes of Renault and Nissan.
Charles, thank you very much. Charles Pellegrin with the business news there for us on France 24.